Hello, fellow Rebel Capitals. Hope you're well. So, Trump is coming out today and announcing the new auto tariffs. This is big news. We've got to watch this very, very closely. He should have already announced it by now, but I'm just getting kind of a live feed from what's happening at the press conference. So, we'll be going back and forth throughout the entire live stream today, trying to get some details as to what is actually happening there and what type of tariff Donald Trump is going to implement that's going to impact the auto industry and potentially the U.S. economy. Next, we're going to go over how the CBO, the Congressional Budget Office, is issuing a warning about this debt bomb. You know that we're under we've already passed the deadline for the debt ceiling. I believe that was in January. So right now, the only funds that Janet Yellen can use to pay existing obligations is just what we have in the TGA. So we got to look at the TGA, see how that's drawing down. Obviously, it's going down at a very, very rapid rate. And the CBO came out and gave a deadline as to when they're done, when they got to wave the white flag, when there's no more money. And a lot of people speculate that this also means, or they assume, this also means that they're not going to be able to issue any more debt, period. That's not necessarily the case. The devil's in the details here. And it's very important you understand the nuance so you can include this in your analysis. We're going to be going over that today. And also, GameStop, GME joins strategy. And the Michael Saylor party. Josh, go ahead and do me a favor and pull up my Twitter feed, because I want to reference that tweet that I just made where Saylor has got his arm around, I think it's Ryan Cohen, and he's like, welcome to Team Bitcoin. And I mean, you may think that's great. You may not, but I'll give you my views here in just a moment. So the first thing we need to do is go over to this live feed to see if Trump has mentioned. I would have thought something would have been said by now, because they started this conference like an hour and 20 minutes ago. So here they're just going over U.S. arrest, another foreign student. Okay, fine. Photo Trump thanks women for electing him to the second term. Okay. Can we please just get to the tariffs here? Can we please just get to the economic stuff? Okay. So we haven't got there yet. So we'll keep going back and forth here to keep you updated in real time. But now that we're kind of waiting here in a holding pattern, let's go over to Zero Hedge and check out what the CBO, this warning they gave about the United States fiscal situation in the Treasury. U.S. Treasury could default as soon as August, CBO warns. I love Zero Hedge, but I don't know if default is appropriate. I'll tell you why. Because default, that word insinuates a default on the debt. You owe a debt. It doesn't necessarily, when you say default, it doesn't necessarily mean that you're not going to be able to pay your plumber, right? So here's a great example. Let's just say that this month you don't have any money to pay your mortgage, nor do you have any money to pay that plumber. We'll just continue with that example. So would you say I'm defaulting on my payment to the plumber? Probably not. It's not really the right way to use that. But you would say I'm defaulting on my mortgage payment. That's for sure, because it's that debt. So by using the word, and I know why they're doing it. It's very clever on Zero Hedge's part. They're using default because immediately we think about, holy S. That means that we could possibly see the United States default on their debt. And, oh, that's going to make the dollar blow up, and we're going to go into hyperinflation, and the long end of the curve is going to go to 20% interest rates, and no one's going to accept U.S. treasuries anymore, and blah, 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 blah. So it is true that that's not great if you don't pay your obligations. I think we should be reducing those obligations substantially. Hopefully Doge follows through on that. This isn't necessary, although this is a big deal. Well, it is and it isn't, right? It isn't because you can continue to roll over the existing debt. You can issue more debt. It's just the amount of debt you have on net can't increase, right? Number one, that's why it's kind of a nothing burger. Number two, I guess there's three reasons. We got a lot of money in the treasury still in the TGA. We'll go over that in a moment. And number three, let's be honest, they always, always, always kick the can. They make a big kerfuffle about this, and then you guys know, the midnight hour, whenever it's time that the government shuts down and all these things, they close down the parks, and just as this visual representation of how horrible it is, life without government. And then they always come up with a deal, and they just kick the can down the road further. It's always what happens. So 99% probability, 99.99999% probability, this is exactly what's happening. But I think it is good to understand how the plumbing works in these types of situations, to know what you really should be concerned with, and maybe something you shouldn't be as concerned with. So U.S. Treasury could default as soon as August, CPO warns. Earlier this week, we pointed the striking plunge in the Treasury's cash position. So this is the TGA they're referring to. And again, I mean, is this great? No. But you'll notice they only have a chart going back to 2021. There's a reason they're only going to 2021, because when you look at this chart, it looks like it's a really, really big deal. Like down here, when we're at these levels, it's just total danger zone. And in reality, if you kind of zoom out, let's see, I know I've got the TGA up here somewhere. That is not it. That is not it. I should have had this. All right, we'll just Google it really quick here. There we go. So if you zoom out, like I was saying, you see that where we are relative to, it's going back to 2010, let's say, we're still at an extremely high level at 435 billion. So you've got a lot of runway there. And even if you get down to zero, again, it doesn't mean you default on the debt. It just means you can't issue more debt to meet obligations. Well, let me say, because the debt maturing is an obligation, but you can't issue more debt to pay expenses that aren't debt maturing. And the reason is because if you issue debt to pay off the debt that's maturing, the total amount of debt doesn't go up, right? But if you issue debt to pay the plumber, then the total amount would go up, and that would be applicable to that debt ceiling. So what the CBO is doing is they're looking at the rate of change here, which is going to be really dramatic. You see, the wet and wild chart. And they're saying, okay, at this rate, where are we going to hit zero? So let's go back to that zero hedge article. Regular readers are aware of the reason for this plunge. Ever since U.S. hit the debt ceiling in the last days of the Biden administration, the U.S. Treasury has been unable to issue new debt. And so, well, that's not true. Come on, Zero Hedge. That's not true. We just had an auction just today, I believe, that Zero Hedge themselves reported on. It was a fight. In fact, just for curiosity here, let's go. If it's not on this page, I know it's on the other page. But as I don't want to take up too much time here, but if you go to the previous, well, we'll do it. We'll show you. Oops, I did it again. Okay. And Goldman. Here we go. 5-year auction. They had a 5-year auction today where the Treasury auctioned off treasuries of brand new debt. How, what? How is this possible? I love it. It's great. So obviously, it's completely false to say that they can't issue new debt. They're right there. You see, they're issuing new debt, but it's just the debt that they have can't increase. So they can issue new debt all they want, as long as that debt goes to pay the debt that is currently maturing. In other words, they're rolling it over, right? And obviously, if you're able to roll it over, that puts a lot less pressure on the amount that you have in the piggy bank as far as the TGA. They say obviously there is a limit to how much longer this can continue. After all, once the cash balance is zero, the treasurer will have to start prioritizing payments and eventually. And so what they mean there, which is absolutely true, is it's kind of just hand to mouth type of budgeting where they're going to be able to pay the plumber, but they're going to have to wait until they get tax receipts coming in to do so. And that's an unknown because there's certain times a year where they get more taxes, less taxes. A lot of the amount, a lot of it depends on what the stock market is doing, what the housing market is doing, because of capital gains taxes, as far as how much they actually receive. So there's a lot of variables right there for sure, and that's what they're pointing out. Absolutely, 100%. It may have to delay payments of interest or repayments of principal. No, it doesn't. No, it doesn't. And if you think that, oh, George, you don't know what you're talking about, you haven't done the research. Yeah, here you go, right here. This is from JP Morgan. And I got another article here from Goldman Sachs as well, but they say the exact same thing. So right here from JP Morgan's website, Navigating the Debt Ceiling, a money market investor's guide to stability amid uncertainty. And we see right here in the first paragraph, as of this date, January 2nd, 2025, the Treasury is unable to issue additional debt that exceeds this limit, although it can continue to roll over existing debt as it matures. And if you just use some common sense, what is a debt ceiling? A debt ceiling just means that you can't increase the debt. That doesn't mean you can't issue more debt to pay off the existing debt that is maturing, because that is not increasing the overall debt. All right, getting back to I can't be I love Zero Hedge and I love the guys over there. I just want to be super specific here, just so you guys have an accurate representation as to what is going on. Which brings us to the latest report from the CBO, which warned the federal government could run out of money to pay all of its bills on time as soon as August if lawmakers fail to raise the suspended debt ceiling, which is as close to a zero probability as you can get. I would put it right up there with the sun not coming up tomorrow morning. All right. The Congressional Budget Office estimates that if the debt limit remained unchanged, the government's ability, okay, we got that, August, September. The X date. Ooh. And is it I always get a kick out of this, and not that Zero had to do this, but the politicians, especially on the left or the right, or whoever's trying to use this as leverage, always tries to make it seem like a government shutdown would just be the complete end of the world. But as you guys remember in the past, I mean, we've had shutdowns before, and it's like, I don't see the difference. Sure, I can't visit the Lincoln Memorial. Okay, what else is going on here? I can still go down to Starbucks. I'm still gonna pick my kids up from school. There's still gas. There's still groceries. Not a big change here, which tells you how important the federal government actually is. President Trump and Republicans are attempting to pass a more than $4 trillion extension of the 2017 individual tax cuts that the benefits of which went mainly to wealthy Americans. According to a range of analyses, the president also wants to include more political palatable changes like ending taxes on tips, overtime, Social Security benefits, which could balloon the cost to more than 11 trillion over 10 years, according to the Committee on Responsible Federal Budget. Isn't that ironic? I want to highlight this for you guys just to add some comedic relief here. The United States government actually and remember, your tax dollars are going to fund this. Our government is using your tax dollars to fund a committee for a responsible federal budget. If there has ever been a committee, an entity that is doing a horrible, horrible job, it is the Committee for a Responsible Federal Budget. Like, how could you go into work? Think about if you work there and you get in, bright and early in the morning, you're set, ready to do your job. How do you measure success? Like, all you would have to do is look at the debt clock, just going up by trillions of dollars every month. And you've got to, at a certain point, say, what am I doing here? I mean, this is the definition of having a completely pointless job. Could we possibly flush money down the toilet faster than a responsible federal budget committee? I mean, Doge, hello, Elon, what are you doing here, buddy? Here's some low-lying fruit right there. The committee for, I mean, I would like to hear them argue, well, if it wasn't for us, the debt would be 40 trillion or, I mean, could we possibly be less responsible? Answer, no. So you're doing a terrible job. We don't need you. Doge, sick 'em, buddy. Anyway, getting back to this here. To enact these cuts, the GOP is relying on a process called budget reconciliation, which enables the bill to pass the Senate with just over 50 votes, blah, 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 blah. Okay. We all know. I mean, it's just like what Lynn says. What is this? Nothing stops this train, I think, is kind of the meme that she invented a year ago or so. I mean, she's right on the money. Of course. I mean, what were we trying to kid? I love what Doge is doing. And if we can reduce some of the waste and if we can shine sunlight on the entire government grift that's going on, I think that's fantastic. I love it. But let's not kid ourselves here. The debt is going to be higher next year than it is today. And it's going to be higher the year after that. And it's going to be a lot higher the year after that. There's nothing that stops this train, as Lynn says. And so, and to be clear, nothing stops this train, not even a committee for responsible federal budget. Geez. So whether it's the Republicans or the Democrats or the squabbling back and forth, it's a foregone conclusion. Unfortunately, it is. But that doesn't mean that what Doge is doing is just a complete waste. I think what they're doing is really, really good, and it's opening up people's eyes. And if there is a path to reducing the budget or reducing the deficit, they've definitely opened that door. And the probability, although very, very low, is higher today than it was prior to Trump being elected. For sure, for sure, for sure. So I definitely want to give him credit where credit is due. Okay, now let's go over and see what's going on with the auto tariffs. I really hope, I would have assumed they would have announced it by now. It's like they're kind of waiting till the end have this big climax that they come out with the tariffs. See, they keep saying US President Donald Trump will announce tariffs. And what on earth are we waiting for? How many women are in Trump's cabinet? Who cares? Who what? Who cares? Oh, there we go. Got it. Trump announces 25% tariffs. Whoa. 25%. All righty then. It's game on, ladies and gentlemen. Let me read this here. Trump announces 25% tariffs on foreign cars. Trump has long promised to ratchet up pressure on foreign automobile manufacturing. Today, the Oval Office, Trump made good on the promise. We are signing an executive order today that's going to lead to tremendous growth in the automobile industry. Okay. All right. I'll give you my opinion on this in a moment. What we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. Okay. Well, I guess, yeah, I'm assuming this doesn't include the inputs to the cars that are made in the United States. And it doesn't necessarily mean US manufacturers. Let me see. We're going to be doing a 25% tariff on all cars that are not made. Okay, great. So Toyotas that are made in the United States, I guess, would not have this tariff. But I mean, look, here's what's going to happen. Are the prices of Mercedes and BMWs and cars that aren't made in the US, are they going to go up massively? Absolutely, because there's not that much margin. There's no way there's a 25% margin in cars. So what you're going to have is the prices going up for those vehicles, which definitely, absolutely is going to incentivize a person to buy a Ford or a GM or that Toyota that's made in the United States as opposed to that Mercedes or BMW. But if you're Ford, what the hell are you going to do? You're going to be like, okay, well, now all of a sudden, let's say you've got two cars, the Ford and the BMW, and both of them are equally equipped and whatnot, pretty much a very similar car. They're competitors, these models, let's say, and they're both selling for $100,000. Okay, well, now all of a sudden, the BMW goes up to $125,000. So now there's a huge incentive to buy American. Absolutely 100%. But what are you going to do if you're Ford? You're going to be like, I can raise my price to 110 and I'm still $15,000 lower. And if you're GM, you're like, I see what Ford's doing. Yeah, we can go ahead and undercut them, but we can kind of do the same thing. And gradually prices creep up and prices creep up and prices creep up to the point where you're very, very close. How do I know this? Because I live in a country where they do the exact same thing. And I see it play out. I own cars here. I've purchased cars here. I've sold cars here. I've sold German cars here. I've purchased Toyotas. I've purchased cars that are actually, yes, I have. I've purchased cars that are manufactured in Colombia. I know the grift here. I know how this works. I know the scheme. I know the incentives. I know what plays out in the real world. This is great in theory, but again, in practice, that's likely what's going to happen. And thankfully, this doesn't include, as far as I can tell, doesn't include a 25% tariff on auto parts that are coming into the United States, because that would really, that would probably create a much bigger problem for the U.S. car manufacturers, because, we like to think that 100% of that F-150 that was made in Detroit that you just bought was all sourced in the United States. Wrong. A good percentage of those parts are actually made overseas. So that would increase their input costs. And then they would have Ford, GM would have no choice but to pass that on to the consumer. Where if they're not increasing the price of those input costs, then they can go ahead and just either keep the price as they have it right now, likely not going to happen, or they increase their price, and that's going to increase their, theoretically, it's going to increase their margins. The problem here, of course, is we're robbing Peter to pay Paul again, because that same person that's going to spend, let's just say an F-150 is $100,000. I know it's not, but let's assume that it is for the sake of the example. So now they would have spent 150,000 or 100,000 to buy that that truck, that Ford truck. Now they're going to have to spend 110,000. Okay, well, did their paycheck go up by 10,000 as a result of these tariffs? Yeah, probably not. Probably not. And therefore, they're going to have to take spending power away from something else, robbing Peter to pay Paul. So you're taking it away from one American business and just giving it to another American business. It's just you're robbing Peter to pay Paul. Now, that's from an economic standpoint. From a negotiating standpoint, much different story here. Much different story. If we're just looking at it through that lens, as Trump's like, okay, I really don't like this tariff. We've got to do it because I got to show that I'm serious about this. And this is going to allow me to bring down the tariffs in Europe or whatever it is. Then, yeah, I get it. I get it. And I don't know if the cost benefit analysis makes sense, but I would favor that rationale much more than I would favor the rationale that, hey, this is just going to be a boom for car makers, and it's going to be able to create all these manufacturing jobs and high paying jobs, and everyone's going to just buy American cars, and we're all going to get rich, as an example, or as a result. And that's just, it's not the way these tariffs work. So I'm going to be very curious to see how this plays out, because this, unlike the other tariffs, are, I think, quite a bit more tangible. And we'll have to see. You know, he could come out next week and say, oh, I'm taking it back. But if this is something that he, let's say, leaves in place for a year or so. And, you know, another thing that I forgot to mention there, I don't know how this works with financing, because let's go back to the example. You got a Ford BMW. This really could impact BMW far more than just the additional cost that they've got to add to their retail sales price. It could be much harder to get financing. Why? Because if you're a bank, the collateral for that loan is going to be the car. Right? Like on a lease, as an example, you know, you're trying to figure out how much the car is going to be worth at the end of the lease, and that's what's going into the payment and the whole calculation. But if you don't know when the tariffs are going to be lifted, and it's Trump, so it's just, let's say, haphazard, to say the least, are you going to lend $125,000 as that car, that collateral, being worth $125,000, when next week it could be worth 100? Because think about that. If he puts the tariff on tomorrow, okay, great. That BMW costs you 125,000. But if he takes the tariff off next week, now all of a sudden that BMW costs you $100,000. And so it's almost like adding extreme volatility to the price of an asset. What's the lender going to do? They're going to give you a much lower LTV. They're going to have to be compensated for that risk. And therefore, that's going to make it harder for the borrower to get that credit they need to buy the car in the first place. So it's really a double whammy against the foreign car makers. Again, on net, I think it still hurts the American consumer, and it hurts the American economy because of what we were talking about earlier. Where will this increase jobs? Potentially, maybe at Ford and GM, and maybe it adds some wages there. But if you think about how many people buy Ford pickup trucks or GMs or whatever it is in the United States, knowing that all those people have to spend an extra $10,000, the math doesn't work. The math doesn't work. In other words, we're just, and let's just assume for a moment that those people are able to make more money and there's more jobs. But great, but that spending, you're taking it away from another American business. You see, it's not like, where would you be able to quantify this was actually a net benefit? If we get more goods and services, that's what it always goes back to. And that's kind of what I'm going to be talking about here with GME and Ryan Cohen, and going out there and being Michael Saylor 2.0, is at the end of the day, the money is not wealth. Gold is not wealth. Bitcoin's not wealth. Your income, by the way, is not wealth. Your income is irrelevant. And I mean, my maid, as an example, right here in Colombia, makes 1.5 million pesos every single month. 1.5 million. She's a millionaire. But who has more purchasing power, you or her? You do. Why? Because money isn't wealth. Income isn't necessarily purchasing power. What is wealth? Goods and services. And making those goods and services efficiently and having access to goods and services. So what I always do, and you guys know this from my videos, is I try to say, okay, 25% tariff on foreign cars. How is that going to increase the amount of automobiles Americans have access to right now? Because that's when they actually get wealthy on net balance. I don't see that. I see prices going up. I see demand going down. I see the government picking winners and losers, and usually those economic distortions create fewer goods and services. I hope I'm wrong. I hope this plays out much differently. I hope, we fast forward in 3 years and we have 25% more vehicles in the United States than we do today, and that's just a huge net benefit to everyone, because we're able to make those cars much more efficiently, and therefore we're able to drop the prices of stuff, just like we were able to drop the prices of so many things in the late 1800s. Remember that deflation? That's the good deflation. The good deflation is where demand increases. The bad deflation is where demand decreases. You see? And if they're creating more and more cars more and more efficiently, you increase productivity, they're able to lower their price and sell actually more units and make more profit, which actually allows them to increase nominal wages, even though prices are going down. Again, the exact same phenomenon we saw in the late 1800s. But it all goes back to asking the question, what does this do to goods and services? Not what does this do to jobs, or what does this do to wages or anything like that. So out of all the things that I've seen, this is probably has the potential to be the most, let's say, disruptive. Let me see if we got some updates here. And I'd also be very curious. Trump, okay, we got that. Okay, we got that. More just pointless questions about women in the administration. Let's see what we've got here on CNBC. I'm sure they're talking about this. Let's see if they have any insights here. Key talking points. President Donald Trump on Wednesday said he would impose 25% tariff on all cars not made in the United States. Trump on Monday had hinted that the auto tariffs could arrive prior. Okay, got that. Sheriff said the tariffs will result in over 100 billion of new annual revenue. Okay. And again, I mean, here you go, guys. Auto stocks fell and after-hour trading following the Trump announcement. Shares of GM Motors fell more than 4%. Stellantis, 3%. Ford Motor lost roughly 1%. So if this was a massive boom for the auto industry, why are these shares tanking? So we're going to have to think, and now we've got the whole Liberation Day where we're likely going to be getting a whole list of tariffs. So this is going to be, sit down, buckle up. This is probably going to be a bumpy one, but we're going to have to see, and how long these are really kept in place. That's another thing that's a complete unknown. I mean, he could come out, this Trump being Trump. I mean, you could be the biggest fan of Trump, but you got to admit, you don't know what he's going to do tomorrow. You don't know what he's going to do in 5 minutes. I mean, he could announce another press conference in an hour and say, "Oh, I changed my mind." It's nature of the beast, right? That's just part of his personality. That's what we're dealing with. So, I'd like to do a whiteboard on this because I need to think through all the components here, because these global supply chains and what we're dealing with, it's not as simple as just black and white. And a lot of times, to understand the probabilities of certain things occurring, you've got to get your hands dirty, look beneath the hood, no pun intended, and really, go over and kind of connect the dots and put the pieces of the puzzle together, because you do have kind of this this potential butterfly effect, and never a dull moment, that's for sure. All right, let's go over GME. Joining Michael Saylor. Josh, were you able to pull up my Twitter? I think you were, right? So let me add this. Or can you add the Twitter deal? There we go. Thank you. So I just put out this tweet, and punchline is Cohen joins Saylor. Is it mandatory to wear black? I guess I should be talking the guy with the black T-shirt every day. But it's just like, I don't know. The guy, the Wang guy, or Hong, or whatever his name is, with Jensen, with NVIDIA, he does the exact same thing. I don't know. Maybe be a little more, be different. I mean, heck, why is Saylor not wearing an orange T-shirt, wearing an orange jacket? That's where you got to give Max Kaiser credit. Max Kaiser would never, ever, ever dress like this. Max Kaiser dresses like a 1970s golfer that is possessed by the spirit of Bitcoin. He's like if a 1970s Johnny Miller had mated and had a baby with Max Kaiser, or had a baby with Bitcoin or Michael Saylor or something like that. Out would pop Max Kaiser in his wardrobe. But more on a serious note. So Saylor says, "Welcome to Team Bitcoin." And this goes right back to what we were talking about before. This is great. I mean, if you're a big GME fan, it's nice to see Cohen finally doing something with the balance sheet there and all the dry powder. I don't know. I'm not going to say that's a good move, a bad move. I'll leave that up to you to judge. But I said, is there a team reinvest and work hard to create more goods and services? Because I think that's the team that we should all aspire to be on. And when I mean all, I mean entrepreneurs, CEOs, corporate executives, right? I understand it's all about shareholder value, and Michael Saylor has done a fantastic job for his shareholders. Chris and I were talking about this yesterday. But it's like, at the end of the day, does this make society better? Does this make us better off? Does this improve the standard of living? It would if they're creating more goods and services, but I don't see Michael Saylor creating any more goods and services. I guess maybe you could say the financial engineering. He's providing a service by giving the market an asset to speculate on. I mean, to be fair, I guess that's kind of a service, but that's not exactly the good or the service that I'm referring to. You guys know what I'm talking about here. So obviously the answer is no. And most likely his underlying business is losing money. And I get it. Your underlying business is dying. It's going in the tubes. It's going down the toilet, and you got some cash in the balance sheet. So go ahead and let's become a Bitcoin bank. You got to transition into something, right? You've got to pivot, as they say, to something, and more power to them. But it would just be great to see these guys that are incredibly talented and incredibly smart, like Saylor. I mean, obviously a really smart guy, but it would be awesome to see him taking that wisdom, that intelligence, and actually putting it towards creating stuff, creating goods, creating services, and doing so in a way that's more productive and more efficient, actually using Bitcoin, actually using it, not as a speculative tool to lever up and financial engineering, but actually using Bitcoin, maybe even, I don't know, maybe pricing your service or your good in Bitcoin, maybe doing something like Lynn Alden is doing, maybe doing something like Jeff Booth is doing, where you're taking that brain power and you're allocating it to creating a ecosystem, creating an infrastructure for entrepreneurs to go out there and create a circular economy, and to do so outside of the system with a decentralized money. At the end of the day, that's how you benefit society. Ryan Cohen, same thing. I mean, you got $5 billion on your balance sheet, dude. You got $5 billion. You're telling me that the best you can do is just go out there and copy Michael Saylor? I don't know, man. How about maybe you take that $5 billion and figure out a way to actually create a profitable business. And then you take the profits of that business and invest in Bitcoin. How about that? I don't know, just an idea. Just an idea. Because at the end of the day, I know it's so easy to, in fact, when I tweeted this out, I noticed a couple people say that we don't need more stuff, George. We don't need more goods and services. All we need is better money. That is the opposite. That is the opposite of the approach we should be taking. The total polar opposite. Why do we want better money? The only reason we should want better money is because it would allow us to create more goods and services. That's the whole frickin' point, right? But in today's day and age, we have been so brainwashed into believing that money is wealth, or if number goes up, then I'm becoming more wealthy. And therefore, all I have to do is focus on number go up. No, that's not it. That's not it. If number goes up and goods and services go down, or let's just say number goes up and goods and services are flat, guess what happens to the prices of those goods and services, even if they're denominated in Bitcoin? They go up, and your purchasing power stays the exact same. Even if Bitcoin was global money, even if everything was denominated in Bitcoin, if you're not creating more goods and services, you're not seeing that healthy deflation, and you're not going to accrue the benefit to the poor and middle class. Again, the whole reason we should want better money is so that it enables us to create more goods and services, because we take that money outside of the system and the central planners aren't mucking with it, right? And they're not getting involved with what you can produce or you can't produce. It's just simply a function of the free market. And then it allows for that transportability that we've talked about many, many times here. That this is why you want a decentralized. This is why you want a better money. You don't want a better money just to have a better money. just because the number goes up relative to dollars. I mean, what are we doing here? What are we doing here? So I'll stop the preaching, but let's get into the specifics here. We're going over to CoinDesk and GameStop raising 1.3 billion via convertible debt to buy Bitcoin. Okay, so they're not even taking their balance sheet. They're not even taking the 5 billion to do it. They're just doing exactly what Michael Saylor is doing. I mean, come on, Ryan. Can you? You're a smart dude, man. That's the best you can do, huh? Is just be a Michael Saylor wannabe. Okay. GameStop is offering 1.3 convertible zero coupon with net proceeds expected to be used to acquire Bitcoin, led by Ryan Cohen. GameStop is taking a page from Michael Saylor. But why being led by Ryan Cohen? Is GameStop being led by Ryan Cohen, or is it just being led by Michael Saylor? I mean, come on. Look, it's just like I always say with Rebel Capitalist Pro. I have different opinions on some things than Lynn. Lynn has different opinions on some things than Chris. Chris has different opinions on some things than Brent Johnson, or Patrick Serezna. If we all have the exact same opinion on everything, and basically all of our portfolios are identical, then we're all redundant. There only needs to be one pro. So to me, it seems like Ryan Cohen is redundant here. Why not just delegate the responsibility to Michael Saylor and pay him a salary as a consultant or something? Anyway, which has raised many billions via okay. GameStop one day ago made public its intentions, to put Bitcoin on the balance sheet. Just 24 hours after adding its name to the roster of companies pursuing Bitcoin treasury strategy, led by its CEO, Ryan Cohen. And again, you want to do a Bitcoin treasury strategy? Fantastic. Fan-frickin-tastic. Why not take it out of profit? Why not? I guess the answer is because there's enough suckers, enough idiots out there that will buy a zero coupon convertible bond. So why not just take advantage of all the rubes? Why not take advantage of the hysteria? Why not take advantage of the mania when you could use, I don't know if GME is profitable, but if it is profitable, you could use those profits for something else. I guess that's me playing devil's advocate there, and I guess that's a legitimate argument. GameStop expects to use the net proceeds from the offering for general corporate purposes, including the See, that's I get hesitant there. You guys probably know their balance sheet and their P&L better than I do. But whenever they say for general corporate purposes, the first place my mind goes to is their underlying business is losing money, and they need to basically take money from someone else because they're not making any profit to plug the hole. Kind of like MicroStrategy. In making this move, GameStop is joining the likes of Michael Saylor. Okay, got it. GME shares down 7% in after hours following an 11% advance. Bitcoin appears to be bouncing off its worst levels, retaking 87 or a low of 86. So yeah, it didn't look like it really moved the price of Bitcoin too much, which is another kind of head scratcher. All the buying that Saylor's been doing, or maybe now Ryan Cohen, the Bitcoin, it doesn't really move the Bitcoin price. And I think since Saylor's been buying so aggressively, I don't have a chart in front of me, but I think the price of Bitcoin has actually gone down as a result. So another thing is I'm very curious to see what the demand for this is going to be. And let's assume you think this is the best idea ever. Okay, great. But there's only so much demand for paying $2 for $1 of Bitcoin. which is what you're doing here, because because you're just hoping it goes to $3. Right? That's basically what you're doing here, because it's trading above NAV, or I don't know what GameStop is, but assuming it goes the same path as MicroStrategy. So there's only so much demand out there for that. And this last round that Saylor had to float, he's with the preferreds, he's got to pay 10%, maybe even more. So that means that's a really high delta above the 10-year treasury yield, the risk-free rate, so to speak. The reason he has to give a 10% yield is because there's not that much demand at 8 or 9, right? So if Ryan is taking some of his thunder there, and it's not like he's just out there buying Bitcoin with profits. Again, they're now basically competing for the same investor that wants to buy these convertible notes, these convertible bonds, or these preferred shares. So it's like, okay, well, why would I take Saylor at 10% when I can just take Ryan at 11% or 12%? And the more companies that do this, the more you have. And I don't know that there's limitless demand for these type of offerings. So it'll be very interesting to see if you start getting, like a race to the bottom here, where they're just offering higher and higher and higher and higher interest rates and better terms to try to attract that investor, because there's more players offering the same the same financial engineering piece of paper. Let's see how markets are trading here based on what was happening with Trump and the big news with the auto tariffs. So pre-market, we've got Dow futures down 121. Okay, so pretty much everything's down across the board. And we've got 10-year at 4.35. Bitcoin right around 87. And gold, I don't think gold will likely get a bid as a result of the tariffs. Just, again, I think more uncertainty that we get, the better that is for gold. And oil up to almost $70. Okay, guys, on that note, I want to encourage everyone, if you haven't already, to get your tickets to Rebel Capitalist Live. We've added some speakers since I talked about this last time. So I want to go over there and just show you guys the speaker lineup that we have. I mean, this is really fantastic. You guys don't want to miss this event. It's going to be incredible. Orlando, May 23rd through the 25th. We've got Barnes, Chris McIntosh, Brent Johnson, Kenny McElroy, Jeff Snyder. Kiyosaki now is going to speak. Obviously, he's a huge crowd favorite. We've got Joseph Wang is going to be there, Rick Rule, and I don't want to let the cat out of the bag, but he might be making a big announcement about his new bank, Battle Bank, at Rebel Capitalist Live. Mike Maloney, always a huge crowd favorite. We got Hartman here, and then we've got someone else, maybe a couple other speakers lined up that I haven't announced yet. So you're definitely going to want to get your tickets ASAP. And as we get closer to the event, we raise the prices. So you don't want to wait. You want to go to rebelcapitalistlive.com right now. All right, guys, enjoy the rest of your afternoon. As always, make sure you are standing up for freedom, liberty, free market, capitalism, and more goods and services. We'll see you in the next video.